April 7th, 2018. I'm Justin Castelli. This is your weekend review on the weekly mixtape for All About Your Benjamins. We'll be covering news and events impacting your financial planning and portfolios over the last week, so let's get into those. First up is 1, 2, 3, 4. I declare a trade war. Earlier in the week, President Trump signaled for a $50 billion tariff levied against China. China hits us back with the $50 billion there, kind of evens the field. Markets calm down. This is a negotiation tactic, and out of nowhere, we get an additional $100 billion of tariffs against China being requested by President Trump. So this new $100 billion is not in effect, but it's been requested. So trade war, tariffs are not going anywhere. As you've seen, it's moved the market in very short term, very volatile reactions to it. It'll be interesting to see what's going to happen. Is this just negotiations that normally happen behind closed door, and now we're getting a chance to see this go down? Or is this a bigger deal and maybe not the best negotiation tactic we've seen? So we'll see, but that was a big thing this week in the markets and in the news. This week was also a jobs report week. On Friday, U.S. non-farm payrolls were up 103,000 new jobs, but that was lower than expectations. So weather may have impacted that. Who knows what the real reason is, and who knows how we come up with these expectations. But nonetheless, lower than expectations, but still growing. We are 90 months in a row of positive jobs, which is a new record. So we've increased jobs every month for 90 months coming out of the Great Recession. Tighter labor markets, there's increasing jobs, unemployment staying at 4.1%. This creates a tighter job market, which can lead and should lead to higher wages, which is a positive. We saw wages tick up a little bit as well. Remember though, wage growth is one of the things that the Federal Reserve is looking at to monitor inflation. So as wages go up, we want to be careful of not having inflation run rampant. So the jobs report, although not meeting expectations, keeps the Fed's policy in line, and we should see a couple more rates increase this year. Those are two main big news things. Another minor one, Spotify had their IPO this week, and I bring this up, I don't usually highlight individual stocks, but Spotify did their IPO, initial public offering, when they come to market for the first time. They did it different. They didn't go the Wall Street way. They didn't pay tens of millions of dollars to have underwriting and road shows. They basically went direct to the market on their own. One unique thing about this and why they were able to do that was this IPO was not to raise money for the company. So usually a company will issue stock on the market to get money for the business to do new things. This was purely a way for early investors, employees to sell some of their stock, liquidate it, get it onto the market. Now it's publicly traded. Bring this up, this may, it seems to have gone off without any major issues. So this may be a new way of IPOs running going forward, especially for tech companies that may not need to raise the funds. They're doing very well, but just want to give their investors a way to liquidate. Another one that is not a major deal, but just a good segue into a podcast I did earlier this week. Wells Fargo could just not keep themselves out of the news. There's an article this week, which will be down in the show notes as usual, about their financial planning services or wealth management and the financial advisors manipulating financial plans to produce a result, resulting in a product being sold to the client. The problem here is the plans were being manipulated without the clients being there, and it appears as if it was done to generate a specific outcome, which was better for Wells Fargo, better for the advisor than it was for the client. Segues into my podcast this week with Brad Sherman, president of Sherman Wealth Management. We discussed the fiduciary ruling. We talked about financial planning and fee-only planning, the CFP designation, how all of this works in together, and of course a little bit of fitness in there as well. So make sure you listen to that podcast to learn more about the fiduciary rule and is your advisor a fiduciary. Be sure to check out the mixtape below. Some great posts this week. I have a great one from Tadas Viskantis of Abnormal Returns. He did his annual interviews with different advisors and bloggers to get some questions answered, and then also some underappreciated bloggers out there. And be on there. Be sure to check those out because there's some great guys to follow. A lot of times you'll see them in this mixtape, but just wanted to highlight that as well. So be sure to subscribe to the podcast on iTunes, subscribe to the blog to keep up to date with everything all about your Benjamins. You can find me on Twitter at Justin Castelli, even a Facebook and Instagram page out there at RLS Wealth Management. With that, we'll let you go and we'll see you in the next episode.